Good morning and welcome to Stock Market Today. It's Monday, December 2nd, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today where you can sign up for a free email that gives you daily stock ideas to consider. Hits your inbox every trading day before the market opens. I hope that everybody had a great Thanksgiving weekend. Let's dive right in. U.S. equities were lower in half-day Friday trading, though the major indices posted gains for the week. All sectors were down on the day. Energy, consumer discretionary, and industrials trailed, while staples, utilities, and financials held up the best. Treasuries were mixed with the curve steepening. The dollar was weaker on the major crosses, reversing earlier strength. Gold was up 70 basis points. WTI crude was down 4.4% after Russia suggested that OPEC Plus should wait until closer to April to decide whether to extend their output pact. As we get to the desk this morning, futures are higher by about 10 basis points, but off the best levels of the morning. And that's to begin the final month of the year. We are in December now. Asian markets were higher overnight, with Japan up just over 1%. European markets are rising as well. Treasuries are under pressure across the curve. The dollar is stronger against the yen and the euro. Gold is down 60 basis points, and WTI crude is up 2.3% to get us going on a Monday morning. Stocks continue to advance from a trend perspective. Right, slight pullback on Friday, but did continue to advance within an uptrend on the week, as we can see here. Near-term support is in that 30.30 to 30.50 area that we've been highlighting, and then down below, call it round number, at about the 3,000 level. This breakout from this range here, the breakout from this range targets 3,200 to the upside for the index, and we continue to be of that view. Now, the RSI is overbought as it's been trading up here around the 70 level, but Chaikin money flow does remain bullish. So the overbought on the RSI tells us that the trend is strong, right? The fact that we can become overbought does tell us that we are, in fact, in a strong uptrend. In the near term, wouldn't be surprised to see a bit of a consolidation given the overbought readings. But from a trend perspective, the overbought reading is encouraging, especially when you add that to the fact that Chaikin money flow is solidly bullish. So the indicators are lining up with what we're seeing from a price trend perspective, and odds favor that trend continuing into the end of the year. You can see the S&P 500 trading above the rising 200-day moving average. So we continue to stay the course, right? Look for leading stocks and leading industry groups, and when those stocks are oversold, they set up compelling entry points. Take a look at our market in a minute now. What are we writing about? In our note today, we're highlighting the fact that seasonal patterns support strength in the back half of December. Mark Chaikin, in his note over the weekend, pointed out that while December tends to be strong, the first half of the month could be a little bit choppy, giving way to back half strength. Small cap breakout, well, we think that that sends a bullish breath signal for the rest of the market, also a sign of risk on activity on the part of investors. The 10-year yields holds the rising 50-day moving average. We'll take a look at that and discuss what that could mean for the equity market. Crude oil weakness, that won't help the lagging energy sector. We've been talking about energy for a while and continue to view that as a weak area. And as I said, futures point to a higher open here today. Let's take a look at the power bars now. Power bars for the major indices. The Dow lost 34 basis points in a half day on Friday, 7 bulls to 6 bears there. S&P 500 down 30 basis points, 136 to 80, bulls to bears for the power bar ratio. NASDAQ down a similar amount, 38 basis points. We have 33 bullish or very bullish stocks in that group for 13 bearish or very bearish stocks. Small caps lost about 0.5%, but the power bar ratio still remains solidly bullish. 708 bulls to 272 bears. Slight downtick in bond sends yields higher, and according to the Chaikin power bar, small cap stocks and large cap stocks are bullish. Major markets across the board, if we look beyond here, are somewhat mixed, but power bar ratios for the major markets here do remain bullish, highlighting or accentuating our view that we are likely to trend higher into the end of the year. Let's take a look at our stock of the day now, auto-generated by our algorithm based on the Chaikin Power Gauge rating, and it's DXC Technology. DXC closed at 37.33, up over 1% on Friday. Power Gauge rating there is very bullish due to very attractive financial metrics, very strong earnings performance, very strong price volume activity. Does have some negative expert activity here, and what we have, in my opinion, is a very bullish stock and a strong trend above the trend line in a strong industry group that looks to be turning the corner, right? We've been in a downtrend. We went into a consolidation, and now we're starting to work higher. The stock is closer to overbought than to oversold, but money flow is bullish. What we're looking for now is what we call the personality change. The ratings turn bullish, but the stock continues to lag the broader market. Now, the intensity of underperformance has been dampening of late, and that's a step in the right direction. The personality change would be complete when the stock begins to outperform the market here. So I think what we do here is we take DXC, we add it to a bullish watch list, and we continue to monitor the situation. If we get continued improving relative strength and work off this overbought condition and get towards an oversold level, then this becomes a really interesting name as a potential rally into the start of 2020. For now, we're keeping an eye on it. Don't see real reason to do anything for the time being, but we want to continue to watch DXC here as a potential bullish idea as the personality does begin to change. Now, our sector tracker, let's look at the movement of the major sectors over the last 5 days. Discretionary at the top of the list, and all eyes are going to be on the retailers as we move into the holiday shopping season. Technology towards the top of the list is encouraging, right? Largest weight in the S&P 500. REITs, healthcare, materials also been strong of late. Staples, comms, financials are middle of the road. Industrials, utes, and energy are lagging. Energy obviously remains under pressure. We're going to take a look at the oil chart a little bit later in the show and overlay that with what's been going on in the XLE, the Energy Select Sector ETF. Also going to continue to watch rates for what that could mean for the bond proxies, in particular REITs, utilities, and financials. Shifting over now to our industry in focus. Aerospace and defense services, which has been a good one over the past 6 months, been leading the S&P 500 by about 2.2%. Its power bar ratio, which measures future potential, is strong. We have 10 bullish or very bullish stocks in the aerospace and defense industry group for only 4 bearish or very bearish stocks, and that earns it a rank right in the middle of the road, number 10 of 21 subsectors, but it has moved down 3 slots over the past week. So if you're going to go looking for names for potential ideas that fit the process or fit your process, names with very bullish ratings in this group are AAR Corp, ticker AIR, Curtiss-Wright, CW, and Arconic, ARNC. All of these stocks have very bullish Chaikin power gauge ratings. So these are the type of names that we want to consider if they're outperforming with bullish money flow and when they become oversold based on our indicator. Let's take a look at the XAR here, the ETF that tracks the group. It does have a very bullish Chaikin power gauge ETF rating. At the same time, it's in a strong trend above the rising long-term trend line. Hitting an oversold condition. Now, relative strength has been mixed of late, right? This was a solid outperformer beginning in the April-May timeframe. It was an area of the market where we were really finding a lot of good ideas for our clients, but the diminishing relative strength is somewhat of a concern. We want to continue to watch that. We'd love to see the group begin to outperform. We'd love to see the group break out of this consolidation similar to the market. Right now, what I would say is you have a good absolute trend, but the relative performance is starting to wane a little bit, and that does bear watching. Now, we do have bullish Chaikin money flow, and we've been persistently bullish for the majority of the past 12 months. So I think XAR is the group where you really want to be selective on the stocks that you look at. Still a group where you can go hunting for ideas, but just be mindful of this diminishing relative strength in the aerospace and defense group. Let's take a look at what's trending now. Yesterday's, or Friday's rather, S&P 500 movers and shakers are gainers and losers. PLD up 5.2%. Didn't see any real news to drive trading in a bullish stock that rallied on the day. HPQ continues to follow through to the upside following their earnings announcement. Tax on 1.72%. NRG, not a lot of news there. Stock higher by 1.7%. We'll note the very bullish Chaikin power gauge rating. EXC, this has been a volatile name. It's been on both sides of this board numerous times over the past couple of weeks, up 1.6% on the day on Friday. And Tractor Supply, TSCO, is a bearish stock. Been under pressure of late, seen a little bit of a rebound on Friday, tacked on 1.57% on the day. The loser side of the board does have a bit of a theme to it. Remember, we said that oil was down over 4% on Friday. That takes APA, a very bearish stock, down 4%. Drillquip did catch a downgrade last week, and then obviously the weakness in oil takes that stock, FTI, down 3.4% on the day. FTI with a bearish rating. Silicon Valley Bank, nothing newsworthy there from a company-specific standpoint. Did pull back 3.22% on Friday. Devon, another stock down with oil to the tune of 2.75%. And Kohl's, obviously the retailers. We're going to be getting a lot of data and stats around the retailers and the holiday shopping season over the course of the next couple of weeks. Obviously, it was a busy weekend for the retailers, so stay tuned there. But Kohl's has a very bearish rating, and it was down 2.5%. On Friday. Remember, they did report earnings the week prior and did see some weakness following their earnings announcement. Let's dive right in now. Now, December tends to be a strong month. What we're looking at here is the seasonal trends over the past 20 years for the S&P 500 on a month-by-month basis. And we can see that on average, December's been up 68% of the time for about 40 basis points of gain. But as I said, Mark Chaikin pointed this out in his note to our clients over the weekend, that the first half of December tends to be a little bit choppy. And I highlight this in my note today where I break this down into weekly bars as opposed to monthly. But that choppiness in the first half of December tends to give way to strength and a rally into the end of the year. So just something to keep in mind. Remember, we highlighted the fact that the S&P 500 was overbought, right? That RSI is near 70, and the first half of December could be a little bit choppy. So we just want to be mindful of the dynamics at play in the marketplace. But what's interesting is that we do start to get some strength into the back half of the year. So potentially a pullback towards those support levels set the stage to become more aggressive on the long side of the portfolio. So continue to watch the market on a day-to-day basis for tactical opportunities, right? Set your watch list, have your names that you want to own, right? Run through your process. And then if you do get a little pullback here in the first half of December, it sets the stage to become aggressive for a rally into the end of the year. And now it's so important to remember those are seasonal averages. Obviously, you can point to last year where the seasonality did not play out. They are averages, but we want to be aware of the seasonal tendencies in the marketplace. Now, the 10-year yield holds the 50-day moving average. This is one we've been watching closely. Here's the 10-year. Holding the 50-day moving average and beginning to move higher, still below the declining 200-day moving average with some resistance at the 2% level. RSI for the 10-year has put in a series of higher lows as it begins to shift into bullish ranges. So for me, I'm watching the 50-day moving average closely. If we continue to hold the 50-day moving average, odds are we're going to rally up here and test the 2% mark, and then we'll start to think about what this looks like at the 200-day moving average as it relates to the equity market. Well, I'll tell you, the rally in small caps has really started as yields have backed up. So that's one aspect, right? If yields start to continue to move higher, or continue to move higher rather, we would expect the small caps to continue to work higher as well. Additionally, we've talked about it from a sector standpoint. Higher rates, bearish for utilities, bearish for real estate, bullish for the financials. So just something to keep in mind as you're thinking about strategic equity positioning. It's important to monitor what's happening in other asset classes. It's called intermarket analysis. I spend a lot of time on it, and I report to you here every day when I'm seeing the shifts and the changes within some of those relationships. And finally, crude oil weakens, and that it's bearish for energy. We're in this kind of triangle with a downward slant to it. RSI is in middle of the range here, kind of confirming the consolidation, but has not been able to become overbought. Hasn't become oversold either, but energy weakness, right? We're looking at XLE here at the bottom of the chart. Energy weakness likely to persist as long as oil is weak. And remember, energy, the fundamentals there still do not look good. So we want to continue to watch crude oil to get a read on what could potentially be taking place in the energy complex. Finally, just a reminder, you can head over to chaikinanalytics.com/today to sign up for that email. A lot of the material for this show comes out of that email, daily stock ideas for you to consider. And it is an exciting week here on stock charts. It's going to be a focus on cryptos here to get us going in the first week of December. So certainly a lot of good content, a lot of educational content to be had there. I hope you all have a great Monday. I will be back here with you tomorrow. Have a great day, everyone.